One of the biggest blue chip players in the space has become Ondo, right? Like Ondo has completely solidified its position as an RWA gem. And I do think that everyone should focus on Ondo because of what they're doing right now for crypto and for the tokenization revolution. In this video, I want to talk about what's happening specifically around XRP and how David Schwarz, the CTO, really kind of confirmed what's going on here. So welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. Let's dive on in. Let's start off with this. So I put out a post the other day saying the multi-chain future is becoming a reality in a big way. Ondo partnered up with Ripple just a few days ago to tokenize on the XRP ledger, and now they've partnered up with Stellar to tokenize on the XLM network. Now, if we actually look at this announcement, we have Ondo will be bringing USDY to the Stellar Org network, offering yield-bearing RWAs. That's the big focus here, yield-bearing RWAs to the Stellar's global ecosystem of treasury management, collateralization, and global payment services with over 400,000 global cash on and off ramps. This is a huge announcement, right? On top of this, we just saw a few days prior that Ripple and Ondo were partnering up to bring OUSG tokenized US treasuries to the XRP ledger with 24/7 minting and redemption using RLUSD, unmatched liquidity, and institutional grade security. Learn how this partnership marks a major step forward for on-chain RWAs. Now, again, when I saw this, I said, I don't understand how anyone could be bearish on XRP right now. These moves being made are forging a path to the first 1 trillion being on chain, which will quickly snowball into 10 trillion and eventually $100 trillion. You are watching history be made regardless of if you believe it or not. Now, again, if we think about Ondo, the reason why I have said that this has become a blue chip, they're pushing this Wall Street 2.0 narrative quite heavily. Okay, when we think about Wall Street 2.0, we think about the biggest names out there on Wall Street. On February 6th, we saw Ondo put out a post, and that was introducing Ondo Chain, the omni-chain network for RWAs. Think about what that means. That means any network, any chain tied to Ondo, meaning the XRP ledger, meaning, Stellar, now has exposure to all of the additional members that Ondo has, which includes Franklin Templeton, Wellington Management, Wisdom Tree, Google Cloud, ABN AMRO, Aon, McKinsey. The Ondo ecosystem already includes BlackRock, PayPal, and Morgan Stanley. So we actually are witnessing Wall Street 2.0 becoming a reality. And again, all of this is focused on tokenized RWAs, institutional DeFi, cross-chain liquidity. I mean, what we are really watching is the convergence of TradFi with the DeFi and crypto ecosystem. Now, yeah, Ondo has massive partnerships. Listen, 96 partners already tapped in. A lot of these are like big players from this space, but also even the Web 2 space as well, like PayPal, for an example. If you actually look at the scrolling names here, you have BlackRock, Ripple, Franklin Templeton, Sui, Wellington Management, Aptos, Morgan Stanley, Jupiter, Aon, Securitize, Solana, Goldman Sachs. I mean, guys, these are massive names out there. They have 10 supported chains already, 50 integrated projects, 80% yield coin market share, and about $653 million in TVL. And by the way, you could see the names of the Wall Street players already tapped in. But also, they put out a post regarding Wall Street 2.0. Now, I scrolled down quite a bit because there is a lot of information in this if you guys did want to go and check it out. But we have Welcome to Wall Street 2.0. The industry finds itself at a pivotal moment. Stablecoins have become a tremendous success with over $210 billion worth in circulation today. DeFi has flourished, providing significant utility for digital assets. User adoption has surged, driving demand for digital assets that can serve as both stable stores of value and sources of yield. Yield coins have demonstrated substantial growth and are poised, we think, to take substantial market share from traditional stablecoins. Large traditional asset managers are beginning to bring their assets on chain. Yet, despite this progress, the current investing experience for so many around the globe is still broken. And they do highlight that $867 trillion worth of financial assets that can benefit from tokenization. This goes back to 2021. That 867 trillion has now grown significantly into the quadrillions of dollars, as you guys do see from some of my recent videos that we do talk about. Now, what they're considering Wall Street 2.0 is blockchain being the foundation layer for this, where you do have global assets, you have 24/7, 365 markets, better rates, new investment opportunities. You also have more efficient fund administration when it comes to asset managers, broader reach, easier compliance, then developers, easy integration, more assets, built-in compliance. I mean, the gap here definitely is being bridged. We're starting to see a new Wall Street being, created, and some of the big players are already being chosen to really kind of drive this home. Now, yes, I do believe that XRP is one of them. Yes, I do believe that, XLM is one of them. HBAR is one of them. Algo could technically be one of them as well. But you also have a few other players behind this foundation layer. Like, for example, Axelar, which already has integrations with, for an example, JP Morgan with Onyx. You also have MasterCard being tapped in here. Now, you have a few other ones as well, but, those are like the main two big players. You have Microsoft technically as a third player, but I'm mainly looking at financial giants here. Now, I did put out a post regarding all of this, and I said, we have watched the multi-chain future financial system become a reality over the last 24 months. Axelar is the crucial piece for this to become a reality. The partnerships that have been announced, including, of course, with Ripple and XRP, really showed us this. Ondo is another big player that's tokenizing traditional finance in a huge way with XLM and XRP. You have a few other players as well, obviously. Again, we're only scratching the surface because we are overlooking so many great projects like these ones here that I did mention. The multi-chain tokenized future became extremely clear when we saw, Archx partner up with Algo, HBAR, XRP, XDC, and other players from the space. One thing is very clear at this point, and that's the fact that quadrillions of dollars will soon live on these networks. These projects will eventually be valued in the trillions of dollars, but right now, most won't believe that. Now, I say this because, if we're watching Wall Street 2.0 become a reality and hundreds of trillions into quadrillions of dollars being tokenized, these networks will be worth trillions of dollars. That's just, it's common sense, right? Now, on top of this, right, with Ondo pushing the Wall Street 2.0 narrative, they also recently had a summit where players like, for example, David Schwarz did get tapped in. If we look at this, we have speaking at the Ondo summit today on the panel DeFi 2.0 Wall Street meets blockchain, where they are talking about basically Wall Street 2.0 becoming a reality. Now, there's two videos from this from the summit with David Schwarz, which I will play here in a second, but I want to play this one here from XRP Drops. And we have epic moment, Wall Street 2.0 will be unveiled. We're at a defining moment in global finance. The convergence of traditional financial services and blockchain technology holds the potential for a fundamental upgrade to our financial system, one that will make markets more transparent, more efficient, and more accessible for everyone. While many of you in this room and those joining virtually have been working towards this vision for years, we believe now is the time to begin working more closely together to make this vision a reality, aka multi-chain, right? Working together.
We're at a defining moment in global finance. The convergence of traditional financial services and blockchain technology holds the potential for a fundamental upgrade to our financial system, one that will make markets more transparent, more efficient, and more accessible for everyone. While many of you in this room and those joining virtually have been working towards this vision for years, we believe now is the time to begin working more closely together to make this vision a reality.
And yeah, this is becoming a reality. In fact, we could see that with a lot of the moves Ondo has made recently, announcing these partnerships between, Ripple, Stellar, and a few other ones from this industry. Now, on top of this, right, I want to play those two clips with David Schwarz from this same summit, where we do have over here, Ripple CTO, Joel Katz, aka David Schwarz, says we are on the cusp of a mass institutional adoption, which leads to mass retail adoption. And yes, this is with Ondo, of course. Check it out.
I feel like we really are on the cusp of a mass institutional adoption, both of DeFi and of other blockchain technologies. I think this is also like one of the key obstacles to mass retail adoption. A lot of people in the space previously thought that retail adoption was like the big wave, but I think institutional adoption is a precursor. You have to connect to where people are. You have to go to where the value is. You can't build a new financial system from zero, ignoring the existing financial system where everybody's money is, where all the value is, where the real world is, trillions of dollars in value. You can't just say, oh, forget about all that, let's just build something new over here. That doesn't work. And so I think this wave of institutional adoption over the next year or two is going to be what's going to pave the way for mass retail adoption. And then we can deliver on those promises. Like, we all want to bank the unbanked, but like the unbanked, like they have to be able to spend their money to buy groceries and pay their phone bill, and so we have to have that institutional connectivity. And I don't think there are any obstacles. I think that's and I think this conference shows that.
And on top of that, the second clip is actually from the Full On Summit, where we do hear, again, talks about the institutional grade adoption that will happen before mass retail adoption. Now, this is crucial to focus on simply because of the fact that we are now starting to see the big institutions flooding in, which means that this next wave of retail adoption is going to happen from these institutional players. Check it out.
As RWA tokenization growth accelerates, what use cases are you most excited about? And what key problems do you think builders should focus on that will drive real-world utility? David, do you want to start with that one?
Yeah, I'm most interested in the use cases where there's high friction right now, where people are poorly served. For almost any technology, when you're trying to figure out where you can get the traction, you look for people who are poorly served by the existing technology, because you don't have to be perfect to get their business. You just have to be better, exactly. And the worse it is, the less good you have to be better. And I think areas like real estate, like venture capital, private equity, things like that are just very poorly served. Another thing that works surprisingly is the opposite ends. Actually, both ends work better than the middle. So on one end, people are very poorly served, there's very high friction. On the other end, where, believe it or not, where people are very well served and there's very low friction, you can actually get traction, because if you can save a very small amount of money, that's better. So for example, tokenized treasuries, you've heard a lot about tokenized treasuries. Those actually work pretty well right now. You might think, well, why would that be an area? And it's because of that. It's because if there's a $3 transaction cost and you can push that down to a fraction of a penny, that's actually a lot, because the margins are so small. If I'm only making 2%, you're charging me a couple of basis points. If I can save you a couple of bucks, that actually does matter. So I think it's like the two ends. As far as like what people should focus on, if we're going to turn to the corner to mass adoption, user experience is going to be absolutely critical. The biggest problem with mass adoption is when the users have to understand the details of what they're doing. If you look at any technology that's gotten mass adoption, whether it's the internet, computers, cars, it's when people don't have to understand the details of the technology that it works the best. And so it's getting that user experience. Interoperability is a big part of that. If it's like, my money's over here, but the thing I want to do is over here, and I really have to think about that, that's too much work.
It's not worth the energy and effort.
And that's probably why institutional adoption is going to happen before mass retail adoption, because institutional adoption, that the complexity is not as big of a blocker.
Yeah, I couldn't agree more.
So yeah, I mean, listen, as we really think about what's going on here, the institutional grade adoption is already underway. I think that's very clear, especially when you look at the names tied to some of these platforms like Axel or Ondo. And then you can see the multi-chain feature happening from those players that have these massive integrations with, like, for an example, XRP Ledger, with XLM. And, I think that we're in the early stages, if you will, of mass institutional grade adoption. And I think that David Schwarz, again, this is Ripple CTO. This is the same individual that had a patent for DLT back in the 80s. He understands this as much as, anyone could. So for him to tell us, like, listen, institutional grade adoption is going to happen far before, mass retail adoption, I think he's 100% correct here. I mean, retail right now is only focused on one thing, and that's the price chart. Outside of that, they're gambling on meme coins. So they're not really focused on the target here. Institutional grade adoption, though, on the other hand, they're focused on what they can do with this technology, what it enables, and how revolutionary it's going to be for pretty much everything around us. So once we do reach that, institutional mass grade adoption, right, retail is going to quickly follow. And I want you guys to understand just how significant all of this is for the entire space. We are now in the beginning stages of all of this to happen, which means this space from 3 trillion to 10 trillion, that's going to happen pretty quick. But 10 to 100 trillion is going to happen much sooner than it took this space to grow from 3 trillion to 10 trillion. And I say that because we're already seeing predictions around $30 trillion being hit by, 2030. Imagine how fast the next 30 trillion moves on chain. If we're going from like roughly 50 billion by the end of 2025 to $30 trillion by 2030. I mean, it's going to happen very fast, especially when you have players like BlackRock here, Fidelity, Goldman Sachs, the biggest banks out there like JP Morgan, Citi, etc. So, just think about how bullish this actually is. So with that being said, up, guys, enjoyed this video. If you guys definitely have a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.